This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices narrowly mixed this morning. We did have a variety of economic reports today, most of which came in stronger than expected. This is a welcome relief as far as the outlook for the economy, especially with yesterday's report on GDP coming in at a very dismal up 0.1%. Also, we did have the Dow Jones Industrial Averages yesterday closing at an all-time high. So we continue to be bullish on stock index futures, even though the Fed at yesterday's meeting announced that they are tapering their quantitative easing program by another $10 billion. That, in theory, would be a bit negative for stock indices since some of the accommodation, of course, being withdrawn. And yet, stock index futures continue to overperform the news. So longer term, we still believe that there is a lot left to the upside in stock indices. Over in the foreign currencies, seeing some recovery in the dollar index, actually a very minimal recovery after a negative performance yesterday in light of the weak GDP report here in the U.S. Also, we have the British pound trading to near a 5-year high against the U.S. dollar. This after better than expected UK house prices that were reported overnight. Also a 3-week high in the euro currency. Some talk that there may be less of a possibility that the ECB will announce more accommodation to their banking system later this year. Our feeling is that they will add more stimulus, but overall, the euro currency will probably hold up relatively well. The currencies, though, that we would favor trading are the dollar from the short side, the Japanese yen from the short side, as well as more economic stimulus is likely from the Bank of Japan, and the pound from the long side as the UK economy continues to improve. Also, it does look like there's a very good chance that the Bank of England will delay raising interest rates. At least that is what our projections are. But in any event, look for lower in the dollar, lower in the yen, higher in the pound. Credit markets actually holding up very well today, with most of the economic reports coming in stronger, and yet treasuries higher, especially at the long end. One thing that analysts may be looking at is the prices paid portion of the ISM report came in at a rather weak number. So low inflation numbers are bullish for treasuries. Also, now that the Fed meeting is out of the way and we have our tapering announcement, which in theory is a bit bearish for treasuries. So that negative now behind us, I would look for higher prices across the board in treasuries, especially at the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.